Hello, and welcome back to yet another exciting episode of the Lazy Money Game. In this episode, I will walk you through the news. There's a lot to cover this week, and of course, give you an update to my portfolio, and finally, answer some questions from the audience. So let's start by looking at the news, and what better place to start than where we left off the last time. So in the last week's episode, I talked about how the Federal Reserve had announced that they would spend up to $700 billion over the coming month to secure liquidity in the market by buying bonds. And within the first week, they have already spent half of that amount. And Monday this week, Jerome Powell was out saying these words: "We will do whatever it takes to secure the liquidity in the market." So they realized that 700 billion was not going to cut it, because as we could see last Sunday, despite the fact that they have already used 350 billions, the rates was still dropping on the government bonds. So just to put this into perspective, never in the history of the Federal Reserve have these words come out of the chairman's mouth. The last time you have seen something similar to this was during the financial crisis, where it was the head of the European Central Bank who said exactly the same: "We will do whatever it takes." But it has never been said by the chairman of the Federal Reserve. So this just goes to show how serious the situation actually is. And while we are on the subject of writing history, despite the fact that I'm truly amazed by Jerome Powell's statement of saying, "We will do whatever it takes," the Federal Reserve has been around for 106 years. The European Central Bank has been around for 21 years. But to put that into even more perspective, the Vatican has cancelled public participation at Pope Francis' Easter events. That has never happened in the history of Christianity. So that's more than 2,000 years. So now you have 1.3 billion Catholics who will have to celebrate Easter in a different way than what they have tried ever before. So if we then go back to the news from the United States, US Senate has passed a historical $2,200 billion relief package. And this will be a split, as I talked about in the last episode, about helicopter money, meaning putting money directly into the consumers' accounts. And of course, there will be something to the companies and something to the healthcare system. And of course, there will be something to the unemployed people as well. And while we are speaking of unemployment, just within this week, more than 3 million Americans have registered as unemployed. That is the largest number ever recorded in the history of the United States. So we are truly writing history these days. But the news flow is far from over. The Defense Production Act, which is a leftover from the 1950s Korean Wars. By that, US government can force companies to produce certain goods in crisis situations. So Donald Trump has put this Defense Production Act into place, and he has demanded that General Motors starts producing respirators. The governor of New York, Andrew Cuomo, have announced that they will have a respirator crisis and estimates that they will be missing between 30 and 40,000 respirators. If we then turn to the IMF, and I know that this abbreviation can be a bit misleading because I'm not thinking about the Impossible Mission Force with Tom Cruise and all the other good actors in these action movies. I'm actually talking about the International Monetary Foundation. So chairwoman of the IMF, Kristalina Georgieva, actually believes that the world will enter a financial recession which will be at least as large as the financial crisis in 2008 and 2009 due to this sudden break in the economy. She expects that the economy will recover in 2021 if we manage to contain the virus and prevent a liquidity issue which we saw in the financial crisis in 2008 and 2009. And of course, it will come as no surprise that the real big pressure will be on the developing countries. So, Chairwoman Kristalina Georgieva estimates that those countries will need a relief package of at least the size of the package that the United States has just enforced. So at least $2,200 billion will be needed in this relief package for the developing countries. And already there's more than 80 countries who have asked IMF for assistance in order to handle this crisis. So that was a lot of financial news. And of course a bit of history with the Vatican. But one thing is clear to me. We have definitely learned from the last financial crisis that the governments and the central banks need to act together and they need to act fast. And that is luckily what we are seeing that they're doing. So there's no doubt that we have a health crisis, and how this financial crisis will develop, no one knows for sure, but at least we know that we are trying to do everything we can not to prolong it unnecessarily. Of course, at some point we will have to take the discussion, how do we open up the society and how many lives are we willing to lose when we start to open up. So now let's go and take a closer look at the COVID situation. So this was the map that I showed in my last episode. A little more than 310,000 people were confirmed with the COVID. More than 13,000 people were dead. 93,000 had recovered. We saw that Italy has surpassed China with the most amount of dead people, and they were actually surpassing them with 50% or even more than 50%. China was still the country in the world with the most confirmed cases. Italy on second, Spain on third, and US on fourth. If we then scroll a little forward in my video here and take a closer look at the states, we can see that there are all these small dots, but nothing to be too worried about at this point, besides the fact that I mentioned that I was actually worried about the states. Let's skip to today's numbers. So we can see that we have more than doubled the number of confirmed cases. China is no longer the country in the world with the most confirmed cases. It's not even Italy, it's actually the United States. When we then take a look at the dead people, we can see that that number has severely increased, so we have lost 19,000 people within the week. Italy now has more than 10,000 dead people. Spain has actually surpassed China as well. They have more than doubled China's numbers. So this is really escalating quickly. And if we then zoom out and go over to the States, last week we saw that we have a lot of small dots over here, but this is really escalating in the States as the numbers are confirming here. And of course I know that the United States has ramped up their testing, so they are testing much more than they did previously. But as I pointed out last time, I'm really concerned for the United States because they are acting not as fast as you would have hoped. They are sort of on a curve which is worse than Italy, and we can see where Italy currently are now. So most likely the United States will surpass Italy, if it's within 2 weeks or if it's within 3 weeks. No one knows, but the numbers are clearly pointing in one direction. So I think this really serves the purpose of showing how fast this is actually growing, since within a week we have more than doubled the numbers of confirmed cases, we have more than doubled the numbers of total dead people, and we can see how fast it is actually going. So with all that being said, and with all the financial news, I think it's time that we actually go and take a look at my portfolio to see what has happened within the week. So when we take a closer look at the portfolio, we immediately notice that I have gained a little more than $4,000 within the week. This makes a lot of sense since we have seen the biggest relief package in the history of the United States, and you would expect that to have a positive impact on the stock market. So it comes as no surprise that I have actually gained some value within the week. The next thing that we should talk about is, have I bought or sold anything within the week? And this week has been quite quiet for me, since I have done absolutely nothing. I haven't bought a single stock and I haven't sold anything. And I have not even gained a dividend within the week. The only thing that I would like to show here on the dividends tab is, since we are now at the end of March, I end up with $275 in dividends. So that is actually quite a big increase compared to February. And as I mentioned last time, I would actually expect some of the companies to cut their dividends, since it makes no sense for them to keep paying out a dividend if they have to, for instance, close all their stores like Macy's. So I would expect to see that. And then every single investor have to ask yourself, is this only short term, or is this something I think will continue to go on, so they won't be relevant anymore, so I should actually sell the company? But for now, I have decided to keep Macy's. However, I may change my mind in the future. The next thing I have to do is to apologize for the missing graph down here, so you can't no longer see my pie chart, since I have some issues with my Google Sheet. If it's not fixed within the next week, then I will probably make a new sheet to see if I can get it to work. Otherwise, I will probably just input the data into a regular Excel sheet and make a graph there. Next, let's go and take a closer look at some of the questions that I have received from the audience. So due to this crisis situation, we are seeing a lot of different financial tools from the toolbox being used. For instance, the counter-cyclical capital buffer. So of course I received a question from the viewer saying, what is that concept? And since it's rather special, I decided to make a separate video about that subject. So if you want to know more about that, I would encourage you to go and watch that. The next question I received was from someone who is not familiar with YouTube. It's about, how do I actually find your description for the video? So here you can see my video. If I scroll down, there's this saying show more. If you click this, then you can see all the links that I usually include and the description for what the episode is actually about. So that sums it up for yet another exciting week on the stock market. So hopefully you have made it all the way to the end, and remember to like, comment and subscribe in order for me to keep providing valuable content for you in the future. Bye!